Right, I'll start with the Dixie guys, and then we'll move on to like totals like normal, and then we can go on with BTC and stuff. Can everyone see my screen before I carry on? Yeah. Okay. Great. So first and foremost, Dixie. While I've been away, we finally hit that 110 target we were talking about. Right? We were talking about this for a few months, and the reason I was talking about this level for so long was because this was the first obvious liquidity raid that I saw on Dixie with regards to the range that we've been creating since 2022. Right, so we had true range in black first, and then over time we developed a wider range within the two white lines. Right, that's why we had these marked out for so long. And with regards to the white, right, so since the white was the liquidity rate of the black, we're now looking at a liquidity rate of the white. This was the next obvious target that I had just based on my system. Right, so we were talking about this one for a while. This level, it hit when I was away finally. 110 to 109. We had the 414. We had the 13. So that's fib retracement, that's trend based extension, and that's a different trend based extension right there. So three very confluential areas with an intersection from a 66618, i.e. golden pocket if you do fib speed fan, from all-time highs to the trend low of Dixie, right? So it's just very confluential in terms of both a horizontal perspective and also a trend over time perspective. This was a nice intersecting area. So we've hit that, and now we've had this big dump. So what I would want to see, if you're wanting, like, let's say over the next 6 months, you're wanting an extremely bullish market, I'd want this to be proven now to be deviation, right? I'd want us to go up, which you've done now, right? Tap the liquidity from up here, go back down, take out the range highs in a very clear fashion, but then reconfirm the original resistance that we're actually dealing with, i.e. just this red box, reconfirm this area to be resistance once again. If we do that, then we will have confirmed that this was a deviation in terms of the move, right? If we don't do that and we keep bouncing and trending up, then this doesn't become deviation anymore. It becomes proper structure, and Dixie could climb higher than 110, right? So, but just historically speaking, if you've wanted those huge euphoric moves in the market, right, typically that's always been accompanied by a Dixie that is going down. We know that wasn't the case when this was happening. So maybe this is the first bull market where the Dixie and the actual crypto markets totally decorrelate, and even though the Dixie's going up, the crypto market goes up with it, right? But until it actually happens, we're not going to say, oh, well, what if that happens, because it hasn't happened yet, right? That's just not the seasonality. The seasonality is that Dixie goes down in order for everything to have an insane rally. So until proven otherwise, that is the theory that we're going to stick with. So I'd want this to be deviation, and then for Dixie to carry on, go back towards range lows. Basically, if we get this, I think that'll be that next period in the market where Bitcoin's goes up to grab that new high, Ethereum gets its run, Ethereum beta, some more alts. So basically, we get the next leg of the market. Right, so that is what I'm currently eyeing on Dixie. Of course, what the Fed says and the FOMC could alter this, and you could literally just climb higher before we think about going lower. In which case, we could have a delayed pump in the market. By that, what I mean is maybe we don't get bullish straight away within the next 3 months. Maybe we have a couple months of chop, maybe a bit more down, and then we rally up later on into the year. That's always a possibility, but we'll see what the Fed decides, right? And we'll take it based on that. But for now, just based on TA, I want this to be deviation. Right? That is what I want. Whether we get it or not, we'll have to see. But the target that we've been talking about for months and months and months, that's finally been grabbed. Right, that's been grabbed. So this would be a beautiful place for it to actually create some sort of deviation structure and go back down towards range lows. So that's the Dixie. Let's look at USDT dominance next. And so again, same thing I said in my last stream / YouTube video that I released. Until we lose this red line, no euphoria. Right, so we had this blue line, i.e. the line at best fit. The reason we mark this line now is because this is where we anchored it such that we have the most amount of taps throughout history. Right, so this was a very, very reactive zone in terms of diagonals. We can see that very clearly just visually, right? We lost that, but what we haven't lost is the actual range extreme, right? The range extreme is we have one tap here, we have a second tap here. So if you just extend that to the right, compared to this, the range extreme would be somewhere down over here. So again, what I said last time I streamed about a month ago now is, don't expect your alts to absolutely boom and Bitcoin to go grab new highs until we have a confirmed loss of the red line. right? So when we were here last time, we were somewhere around here. I think last time we did the stream, I said, yeah, we can get pumps back up, but as long as you don't reclaim this blue line slash this red box, you're completely fine. You're probably just gonna keep chopping in between, right? And that's what's been going on so far. You've just been chopping in between your actual range extreme and then your line of best fit for this area. So as long as we're below this, that's a good sign, because over time, that's a sign that buyers are not able to reclaim this trend. As long as we don't reclaim this trend, we have no arguments for further continuing that grind back up on USDT dominance. But again, as long as you don't lose this red line either, you don't have the argument for full euphoria, because you now have a level that could act as support, preventing USDT dominance from going further down, i.e. the amount of liquidity locked in USDT doesn't all of a sudden just evaporate. Right, so that's why we've been getting so much chop in the market right now. In terms of USDT dominance, we're literally just chopping in between, rejecting off your true, let's say, your line of best fit in terms of your demand line, and also your range extreme in terms of your demand line. You're just chopping back and forth. There's no clear resolution. Neither side has shown its hand yet, right? But the bulls for USDT dominance haven't come and reclaimed to take it higher, which would be bearish, and the bears for USDT dominance haven't come down to break this and confirm it as resistance, which would be extremely bullish, right? Neither of that has happened, which is why we're getting chop and indecisiveness in the market. Okay, so USDT dominance, nothing much for me to say here. But basically, for extreme moves, you're looking at two things. You're either looking at this, or you're looking at this, right? And this is what you want if you're bullish. We might get one more drive up, take out the range highs, and then perhaps do something like this, right? Just local distributive structure if you're bullish. But what you don't want to see if you're bullish again is a reclaim, grind up and start reclaiming these levels. If this gets reclaimed, then I'd expect this to go back up towards resistance again before we actually go back down. So that's USDT dominance. USDT plus USDC dominance, same thing. We're literally just holding our fib level, right? You bounced off the 87886, you're holding the 852 for now. That's literally it. Nothing substantial that's happened here. My market top target for this cycle is still somewhere down towards the 886, right? About 2.80%. But let's see if we get that or not. For now, that's all it is, just a target. It doesn't need to hit, but in terms of just the technicals and in terms of confluence, this would be a really nice area for us to bottom out on. This would be an area I'll be eyeing for bottoming structure anyway. B-Volt tap was one other confluence you could have looked at as to why did we get an impulsive move, right? Again, after you tap 24, 48, 72 hours, however much, give yourself a day to 3 days for the expansive move up. In this case, you tapped, and then within 2 days is when you got your expansive move up on Bitcoin. Bitcoin dominance. Now, as to why are your alts taking such a big hit? Why was alts bleeding so hard and still red right now, right? Even though Bitcoin is a bit in the green, why is so many alts still in the red? The answer is Bitcoin dominance, right? What we had, especially yesterday, day before, the scenario we had was Bitcoin was going down while Bitcoin dominance was actually going up, right? Again, if you think about this logically, if the dominance of something going down is going up, the only mathematical way for that to happen is if the piece of the pie that the dominance represents is getting larger as a whole as compared to the rest of the pie, i.e. your altcoins, right? So if Bitcoin's coming down and Bitcoin dominance is going up, then obviously the only logical way for that to happen is altcoins are going to be taking a serious beat down, which is why you had your alts heavily in the red over the last 2-3 days, right? Because Bitcoin dominance was grinding up as Bitcoin was going down. That is never a good recipe for altcoins, right? But in terms of macro structure here on Bitcoin dominance, there's still nothing major that's happened. You bounced off the low, sure, but you haven't gone to reclaim any key levels or anything like that with conviction yet. If you start retesting this level on the weekly, right, the mid 58.76%, and it starts holding a support again, then we'd be talking about 59% and back up to a 62 perhaps, right? Maybe the 62 would be the next target. But that's if this gets flipped into support. Has there been flipped? Actually, well, I mean, on the daily it's been flipped, but let's see if you get follow through on the weekly or not, right? But based on this daily flip, a Bitcoin dominance could definitely grind up higher. Your next target is 59.95%, the 382, the same area where we got this, right? The support, resistance, support, support, resistance, resistance. See if you go up over here and you treat it as resistance again, then back simple range, you're back down towards 58, and if you lose that, you're back down towards 57. But if you do not reject off it, then this time around, I think we take a stab up towards 62%, 62.01 to 62.51. That's the original target we had laid out a few months ago. We front ran it here, but we could very well grab it, right, deviate, and then break down. But it depends entirely on the price action we get once we get to 59.95%. If you start getting wicks and closes below, that's a sign that you're probably heading back down, right? But if you then start getting closes above, then 59.95% will be support. The chances of this being grabbed will go up much more if this gets flipped into support. So we have 59.95%. That is Bitcoin dominance. Ethereum dominance, not going to look at that yet, but there will be a few months where once Ethereum takes the lead, we'll have to look at that. What I'm interested in now is the totals, right? So total one, first and foremost, the exact same areas that were pointed out, right? The projections, the ABCDs. So the macro ABCD from this ABCD, not change these levels, at the same levels as we were looking at last time I streamed, and the ABCD in terms of the 0.5, right? ABC. D, the 2.0 is right over there. We're still at the exact same area. Nothing's changed in terms of what is being used as resistance. Right? One question I get a lot is like, how did you know this would be the resistance? Right? I didn't know that this would be the resistance. All I was doing when I pointed this out, right? Because these were shared, these extensions were shared before Total One even broke out from its all-time highs. All I was sharing was potential areas which could act as resistance, right? So by that, what I mean is you don't just go up here. Let's say if this was a ticker, you wouldn't go and start setting limit shorts in this area, because there's no price action here that is telling you that this is resistance, right? For all we know, we could have completely smashed through here if the narrative was strong enough, right? Just because there's lines there doesn't mean it needs to be the level you take a trade off. What is important is once we get to that area, what kind of reaction do we get is what you're looking for. So what we have is aggressive buying, high volume buying going into this area, but are those buyers rewarded? No, they're not, right? So first and foremost, the aggressive buyers in context here are being absorbed, right? So that is the first sign that sellers are stepping in at this area that was projected. Secondly, if you look at the actual candlesticks itself, there's very clear signs that buyers are trying to take the price above the 3.63 trillion and 3.72 trillion, right? But even if there's monumental moves up to that area, by the time the candles close every single week, it's closing way below, right? So there is no substantial presence from buyers in this area. Sign number two, sellers are active, right? So, and signs number three, over time you have deviation, right? You have actual resistance, and now what we've had is reconfirmation of resistance. You have multiple attempts from buyers to actually go above and non-successful. On the daily, it's much clearer, right? Aggressive buying, 1 day, 2 day, 3 day, 4 days straight of sellers showing buyers they're in control, beat down, right? And then buyers come up again, they try to get above, sellers showing they're in control again, beat down. Same thing over here, you go up 1 day, 2 day, 3 day, 4 day, right? Of buyers attempting to breach through this level, and then a few more days of them trying but not even reaching this level, right? We're saying supply is so high that sellers aren't even letting the buyers come up to tap this level anymore, and then beat down, right? So I didn't know these were going to be the resistance to watch for. All I can do is project some key levels in terms of technical analysis, and then it's completely up to the market, right? You just analyze the price action at your key areas. If price action supports your thesis, you then, carry on with your original plan based on that price action, right? But if you go here and you start seeing this flipping to support, and anytime sellers try to go below, it wicks up, candle bodies close above, and buyers are just showing strength, you're not going to be egotistical and keep holding shorts open or something like this, right? Because there's nothing there showing weakness if that were to happen. But obviously that didn't happen. We had sellers showing clear signs, which then just validated the thesis I had originally, which is this area is going to be resistance, right? That's it. Total One is still fine, by the way, right? Ever since we've hit this area, note what has not happened is you haven't gone and got back below your 2021 all-time high. Very, very bullish. This is literally just consolidation. You have a new consolidation range forming. Maybe you get one drive down to take out the consolidation lows, but like I've said, until you lose the mid of this gray box, right? That's what I'd be watching the most. But all the way up into here, this dotted white line right over here around 2.81 trillion, right? As long as you're above that, everything is fine, right? You could deviate there and then reclaim and go higher for all you know, right? There is a lot of support down in the area. Obviously, this was previous all-time highs. Now you're above it, so any moves down to this area you're going to regard as support. until proven otherwise. You also have a weekly seller zone in this area. You have weekly order blocks in this area as well. If you take a look, there's something in this area. There must be a reason why I marked this out. 1 second. What have I marked out here? 3 days. I think I just marked out a supply zone. Yeah, I've just marked out a area that's been a supply zone. So you've had an area of huge supply in this area as well. And what I'm actually going to do is I'm going to take that and I'm just going to move it ever so slightly. 1 sec. Let me go into the yearly first. Nope. 6 months. Can't figure out why I've left that there. Monthly. Oh no. Okay. This is going to be the monthly seller zone. Yeah. Okay. So, like I was saying, 2.8 trillion, right? As long as you're above that and you're regarding that as support, Total One is going to be flipping what used to be resistance into support very, very bullishly. So even if you do get a pullback into this, it's nothing to fear. If anything, this would give you a stronger argument once it matures as to why should we be going higher regarding Total One, right? And we have targets higher as well. We have a XABCD, right? That is a 5-point wave structure. 1.618886. For those of you familiar with your harmonic patterns, this is a deep crab. Right? This is a bearish deep crab that takes you all the way up to this box, and this box, right, it has confluence. The reason I drew this box out originally is because this is a golden pocket. This is a 1.382, 1.34 with regards to the trend base extension, right? So you have fib retracement and trend base extension projecting together at this area. So if you get above 3.72 trillion, the next level I'll be watching for is somewhere around between 4.36 trillion to 4.51 trillion. If you decide to go above that, then it's going to be somewhere between 4.92 trillion and 5.09 trillion for now. But this Total One, higher time frame, right? If you look at the daily, yeah, it might look a bit nasty, of course, but just put into perspective, where you are, where you stand. Higher time frame, you are completely fine. Okay, even though this is resistance, you're literally still consolidating above previous all-time highs. There is no technical damage that's been done to the chart whatsoever to speak of. If you get something like this, sure, then higher time frame wise, get worried, right? If you start flipping this back into resistance. But until that happens, there's absolutely no reason to be bearish on the higher time frame at this area that we're currently in. It's just like I said, you're just consolidating, creating a new range before you decide, okay, you're going to go lower, you're going to go higher, right? That's it. Total 2, very, very bullish. I think in some ways, Total 2 looks even better than Total 1. Given that this hasn't even taken all-time highs yet, right? So in terms of like moves up, this is still lagging. Nothing's changed since the last stream I did over the last month, basically. If you take a look, weekly order block that used to be a bearish order block, mitigated, flipped into support, right? So this mitigated order block, the thesis is this used to be an area where sellers are in control over the buyers. Supply is greater than demand. If you have a bearish liquidity pocket, that is what you are saying, right? Even if you don't think along these terms, that is fundamentally what is being said. Supply is greater than demand, sellers are in control over the buyers. That is what a bearish liquidity pocket is. That was confirmed over here, right? That gave you that big move down, straight back towards your 2021 12-month levels, right? But after that, what happened, right? You move back up. This candle completely mitigated this zone now. I mean, it was mitigated here, but this fully mitigated it, meaning now this is no longer a valid liquidity pocket, right? What most people do in this case, is completely delete this zone, right? I do not do that. I call these mitigated liquidity pockets now. You can still use the fact that this represented an area that is trying to tell you this, right? To read future price action. Because now, if you take a look, what is price action telling you? No longer is it telling you this. It's telling you now the exact opposite. It's telling you that buyers are in control over the sellers. Demand is greater than supply. That is what any check back to this area is telling you. So you have, right, if you take into account the fact this used to be a bearish liquidity pocket, and then read the current price action around there, you have a very, very clear narrative flip in front of your eyes, right? Because you're saying, literally, basically what you're saying, an area that was meant to be full of sellers and supply has turned into an area where clearly buyers are taking control and demand is prevailing over supply. That is not a scenario in which you just blindly short, right? So mitigated liquidity pockets are very, very important and very, very useful in my opinion. That's why I never delete zones once they're done. In terms of liquidity pockets, it's very useful to read future price action based off them. Pair the fact Pair that with the fact that you also have your 3 month seller zone here, right? So over 3 months, this was the area where sellers were in control. Right over here, you have no substantial candle body closes above from the buyers, right? It's all sellers that are in control here. Next thing you know, any pullback to this area, buyers are clearly in control, right? You're making higher lows over time. You're compressing. Total 2, in my opinion, looks fantastic, right? Which is why I'm going to be focusing very heavily on ETH in today's stream, because for my next phase of the market, right, I'm going to be rotating a lot of profits into ETH and some ETH betas. Right? I'm already 6 figures deep into ETH. I'm just going to be increasing that more. I'm going to be allocating about 60k into ETH BTC as well, just to have ETH BTC position, and then also some more money into ETH betas, right? I think just looking at this chart, looking at how ETH is held up, looking at seasonality, I know we've been talking about ETH for a long time now, right? And it's just taking his time. It's been very delayed this cycle as compared to the seasonality we had previous cycles, but that still doesn't mean I'm going to write ETH off, right? I think the more and more this drags on, the more and more explosive ETH's move will be. And that's my current belief, right? Of course, I might be severely disappointed by the time ETH has finished with this rally, but I think for the next phase of the market, just getting rid of many alts and just focusing heavily on ETH and just a few ETH betas is going to be the play for me. But if you look at this, right, you're compressing above your resistance, right? You haven't taken all-time highs yet. You have wave structures taking you towards 2.06 trillion, so on and so forth. If I was to open this up, right there, right, ABCD. It's not a perfect 786, I know that, but very close, right? Very on the macro, it's very close. So somewhere around the 1.272 would be the target. We also have that 618, right? 1.618. We're still below that, but we just need to go and flip this. I just go and flip 2021 all-time highs and the ABCD 1.618 into support. If we can base this as support, that's going to be a very, very strong just springboard for ETH, for Total 2 to absolutely bounce, right? If Total 2 goes, of course, ETH goes with it, right? So I think Total 2 looks very, very good, right? You've not lost any key levels. It's not like Total 3 or others where you're actually gone below resistance, especially others, right? Others is still below resistance. This looks prime. You only have one major resistance. That's this zone, 1.618 to the 2021 all-time highs. Basically, this red box to this top. That's the only zone we need to overcome now for ETH against BTC. Sorry, not for Total 2, not ETH against BTC, right? But I think Total 2 looks fantastic. So let's look at Total 3 next. Total 3, actually, wait, no, I was thinking about others. Total 3 also looks very, very good in terms of your key levels. You're compressing in between your 2024 seller zone, right? Basically, in 2024, between those yellow lines, that's where sellers took control, right? So by the time the yearly candle closed, we say 1.16 trillion to 933.55 billion. That is the total area where sellers were in undeniable control. What we have this year so far, what is bullish, is buyers have refused to let sellers take control of that low, right? Because you can imagine if now we open this new year and we started trading below and accepting below your 2024 12-month seller zone low, right? You're saying you're trading below the area where sellers are in control. So you have this whole area above you as resistance. That's going to increase your likelihood of just having big crashes down, because no one's willing to buy if buyers can't demonstrate strength to hold this level, right? But now what we have is, as the new year opened, right, if you go and look at 2025, where did it open? Here, right? As the new year opened, you've got some pullbacks, right? And you've got some pullbacks towards the 13th as well. But look at the candle body closes. Every single time they attempted to lose that 2024 low in terms of where sellers were in control, buyers redefended that area, right? And then after that, what did you do? You went up to attack your 2021 all-time high, right? You're regarding the mid as resistance. You're below the mid for now, but we just need to do this. If 1.05 trillion is flipped into support, your next target once again is going to be anywhere between 1.13 to 1.16 trillion. You flip that into support, this is also going into price discovery. Right, so Total 3 also looks very, very good. In fact, Total 3, you don't have much resistance above you at all, right? You only have, one is 1.05 trillion, and your main resistance is 1.13 to 1.16 trillion. I'd argue that Total 3 looks even better than Total 2 in terms of being able to run up easier, right? But the only problem with this is this relies heavily on money flowing into alts to begin with, right? If Ethereum starts catching rotations, it won't matter, because Total 2 will overtake Total 3. But Total 3 also looks fantastic, right? Or your alts in general, which is why, another reason I'm saying higher time frame, there's no need to be overly bearish, right? If you start, of course, if you start losing 933 to 873 billion as resistance, right? You start doing this, and you confirm this to be resistance, then of course you have more things to worry about, because now you've got a potential shift in structure in the higher time frame, and perhaps you go a bit deeper before you create some sort of bottom and go higher, right? But that just hasn't happened yet, and many people will try to plan for that happening without actually planning for, okay, but what do you see in front of you right now? Right, the current price action is going to be king. You can try and have scenarios, but there is no way you can prepare for this while also preparing for a potential move up. That's completely two contradicting sides of the market. Right, there's no way. If someone tells you I'm prepared for both scenarios, how? To prepare for this, you need to be severely de-risked, but to prepare for this, you need to be holding. Many people will say, oh, I'm happy if it goes up, I'm happy if it goes down, I'm positioned for either. It's very difficult in reality to be positioned for both, right? If you're positioning for this, that means you're offloading. You don't have positions, you're opening shorts. If you're positioning for this, you're not going to be opening shorts, you're not going to be offloading, you're going to be buying more because your thesis is it goes up, right? You see many people saying, oh yeah, like, I'm positioned both, either, doesn't matter. Complete horseshit. You can't position for both. You're either one side or the other. You can manage your risk when it comes to either side of the market. You can be de-risked, right? You can be less aggressive, right? That's the best you can do. You can't be fully positioned for both, right? It's just not possible. What are you going to do? Just max long and short the same asset, right? What's the point in doing something like that, right? So there's no way you can be positioned for both, and where we currently are, I'd wait for more resolution if you're trying to open fresh positions for now, right? Because currently we are at the mid of a range, but I'd want us to get above 1.05 trillion before you think about opening any new positions, right? Because if you flip this, you're opening positions firstly with the thesis that, okay, I'm going to see what happens once we get here. If this shows weakness, you've caught some trades with a this will probably yield you about 20-30% in many alts, right? And you take profits across the board if you see, okay, but buyers aren't able to get above here, and then you'd be looking for some shorts, right? Because your risk to reward favor shorts in this area. If you flip, you're not looking for shorts, of course. You position some more into your alts choice, because then this is going to go into price discovery, right? But where we currently are, mid-range, I won't do anything here yet, right? I'd wait for, you can be a bit more patient to get even a clearer thesis in terms of where we're going, right? Because if you think about this like a range lows, range highs, this is very clearly range mid, right? And you're smack bang in the mid of your range mid, and I wouldn't do anything here. Neither side is currently showing strength nor weakness, right? So this is not something you trade off of. You just let the market do its thing for now. So that's total 3. I'll look at the chart in a minute, guys. I'll finish these and I'll look at the chart before I move on to BTC and stuff. Others, now this is the weakest out of all of them, right? Others, we've already below resistance when we last looked at this, by the way. So the last time I streamed, we were, I think it was like one of these candles over here. We had already put in some distributive structure, right? And by that, what I mean is, if you take a look, let me get rid of this, I'll put it on fresh. If you go to the daily, we have initial resistance, radon liquidity, reconfirmation of resistance, and locally we have that as well, right? You have two inverted smiley faces basically. You were trading below your key resistance here. You'd already grabbed liquidity from up there, right? Your 1.414 off the 707, that was hit, and you were trading below your resistance. So what we were saying last time was, okay, if you're below this resistance, just don't do anything until you get towards range mid, right? So we've hit that range mid since I said that last stream twice now, once and twice, and we're holding the range mid for now, which is fine, right? As long as you hold this range mid, we do have this 0.5 ABCD in play, ABC, and as long as you don't go and make a new low, this 0.5 will be intact, and eventually you should be looking for a 2.0 expansion, right? We've also got the macro 1.13 at 547.5 billion. That's not changed. No damage in terms of overall market structure, but obviously it's much nicer if you were above this resistance, which you're not currently, right? So you're at the mid. Now, important thing, what we're saying, the next area, your next points of interest was the mid, right? So for now, buyers are showing strength at the mid, right? So then again, if there was any alts you were looking to snap up, right, regarding others, you do so based on the reaction you see at the mid. If you're looking for scalps, you look at this on something like the hourly to get your lower time frame basis, right? So you look at the hourly. If you see on the hourly, okay, you've got insane buyback, and then you've got a high low following the insane buyback, aggressive sellers not being rewarded. This is where you take your scalp longs on your altcoins, right? Because now you've got confirmation that buyers are stepping in, right? This was a scenario we talked about a month ago when I was last talking about, okay, wait for the potential visit to the mid again, right? Now you don't enter any fresh trades here if you're looking for lower time frame entries, right? You don't, because that move has played out. For all you know, we could come back down to create a new range now, right? You've clearly got an area where sellers are attempting to take control. You've hit key levels again, right? 331.96 billion, and sellers are for now showing strength there. So if you didn't enter here, don't enter anything regarding scalps anyway, right? Don't enter anything here. Of course, if you're entering based on higher time frame, that's a different story. But even then, don't go all in, even if it's higher time frame, right? Because now, yes, you've had a reaction. You could get one more move down to take these lows out, right? If you miss that initial move, there's no way you can enter here without risk to yourself, basically. So only enter what you're willing to risk at these areas, right? That's what you do if you're trying to enter after the move has played out. But you can see, even with that insane buyback, you're now still below those key levels you were regarding as support in the past is resistance for now, which makes me think you could bleed out some more, right? So at this particular stage, in my opinion, it'd be more beneficial for you to just wait for this flip before you enter than just entering blindly here. Just wait for something like this, and then you can look for lower time frame entries based on that flip as well. To your next target, around 369.21 billion. That's total others. Last but not least, we got DeFi and others dominance, right? Total DeFi looks absolutely fantastic still, right? That hasn't changed. If I go over here, first and foremost, turn group 1 on, right? DeFi 886 right there, right? So we know there's a harmonic there, which means there's also a macro 886 to a 1.13 wave structure taking you to 221.36 billion. That hasn't changed. The 618 to 1.618 still hasn't changed, right? You front ran the 1.618 before going lower. The only thing that has changed is, of course, you've confirmed your T2 and your 2024 12-month seller zone mid to be resistance. Right, so again, if you take a look, what happened was, right, you created your seller zone, and once the new year opened, buyers attempted to go, you hit the mid, sellers proved they were still in control, right? In moments like this, all you do, you drop onto something like the daily, right, and you take a look. So 2024 closed over here, right? You had your data to put this down by the time this close happened. So then when you get the move up, this is now 2025 data in correlation to 2024 levels, and then you have sellers showing strength going into that mid, right? So again, an area where sellers proved this was their area for 2024 is still an area where sellers are showing control. So when you see something like this, if this was a ticker you could trade, you would take a short based off this, basically, right? You would take a short just like this. Once you got the retest and you see there was a failed retest, once the confirmation opens red, you open a trade, right? You put your stop loss above your retest highs and then look for a risk to reward that makes sense to you. For me, minimum risk to reward of 3. So basically, I'll take this round to our next key level because my risk to reward makes sense, and also that is your next key level where you're looking for buyers or sellers to step in. Your first TP is going to be at the area, right? You de-risk and put your stop loss to break even at that area, and then after that is, if you go lower, you just trim more as you go lower, right? But that is how these seller zones and buyer zones and vice versa work, right? You're below your 2024 12-month seller zone low, right? And we do not want to be below that, of course. This is what I mean, right? You want buyers to be holding this as support at the minimum, because that way your buyers are trying to establish a base of control, let's say, at an area where it was completely seller controlled by the time the yearly closed last year, right? So buyers need to show control here. We're below that for now, so that's what gave us this insane move down, and that took us all the way down to a 2022 12-month level. We front ran that, and that is why we bounced off there, right? So now for me, if you're looking at DeFi plays, I wouldn't touch any DeFi plays until you flip this into support. Very, very simple. If you flip this into support, your next target is going to be this, and then it's going to be this zone here, right? But as long as you're below this, any move up here, this has the potential to be resistance to just take you back down again, right? So just sit on your hands until this happens. It's very simple, but it's going to be so powerful in terms of risk management and just conviction behind your entry, right? Just wait for that flip. Just something like this. Reconfirm this to be support, targeting these highs basically, right? So that's DeFi. But all in all, DeFi looks great, right? It's still higher highs and higher lows. All of these, like every single every single total looks absolutely amazing. This is again still compression, so nothing to worry about here either. Let's take a look. Anything else? No, that's fine. So last but not least, let's look at others dominance, and then I'll keep up with the chat. Others dominance. We've lost this range, right? So we were treating this red box and this as the range extremes, right? And if you treat those as the range extremes, of course, then that means what we did was reject off the range mid, right? There's your range extremes, and in fact, the way I've done this, what I should do is I should do this. Where was the actual buyers? The actual buyers were here. There, that's the range extreme there, sorry. Yeah, so reaction of the range mid. Went to the range mid, aggressive buyers came in, they weren't rewarded, so you went back down. But again, going back to our September bids, right? What I said in my September videos. If you're going to enter alts now, once again, your thesis becomes very, very clear. You hold alts as long as this green box is held. If you lose this green box, just cut your alts. Buy back in when this is reclaimed again. There's your trend, right? I have a feeling they might go and raid that to stop people out, right? Even if that happens, it doesn't matter. Just wait for the reclaim, and at that reclaim, you just enter your alts again, right? You don't even need to look at whatever chart you're trading. It's very simple. As long as this is holding, it's fine to be in alts. If others dominance loses this trend, there's a high possibility it goes to take out some external liquidity, right? So as long as this is holding, that's your cue to just hold your alts, right? If this is lost, then I'm going to be entering fresh positions if we get down towards this area, and if that's lost, I'll just exit those positions, wait for the either lower points of interest to be taken out or for this to be reclaimed again. But for now, others dominance is fine. Right, at the end of the day, we have a Gartley, we have a completed M shape, we have a type 2, right? This could just literally be a part of a type 2. In fact, do we have another wave structure here? One sec. If I take a look at this, we have from here to here 5, 4, 3. It's not very good, but that falls within the parameters of a bat. Yeah, so perhaps you get something like an 886 here. Something like this, right? A bat at the minimum 0.5 with a plus or minus 0. Here we go. For a bat, the tolerance for a bat, if I'm remembering correctly, is plus or minus 5% basically. So 0.525 is the extension, but I'm just going to pin it here because that was clearly a liquidity grab, right? So if you do that, yes, we very much do have a bat in our hands. So perhaps you get this 886, which would serve as a potential move down to try and shake people out, make them think a losing trend, wick down, but then reclaim. Right, so somewhere around here. Wave structure wise, we have a harmonic going down towards this area. We have an 886 right here. Right, so let me just go to settings and coordinates. We're talking about 8.47% over here. So let me just pin that down. Oh, perfect. Yeah, and that's your bat 0.886. And we also have a 2.618 not far off, right? So your 2.618 would take you just over here. So we've got a nice little PRZ here. Your price slash potential reversal zone. And this one we're talking 8.31%. So settings, and this is your bat 2.618. Okay, so this for me, this would be like, if we do have a bigger pullback, I'd be looking for a I don't care if this gets rated, but some sort of price action to come in around here, right? If you start completely going below this, then yeah, that's a bit fucked. You've lost your trend, you've lost your M shape, bars aren't stepping in. You probably go out to take some points of interest to the outside, right? Some external liquidity, maybe some liquidity pockets that were here before. But for now, if you do get a rate of this trend line, I think it's going to be towards this harmonic, which would still serve as a type 2, by the way, will still serve as a type 2 to this bigger M shape we have going on here. So we have our initial M shape, type 2 return. Once the type 2 return is finished, then you look for that bigger move up. Perhaps with something like this. If you take the harmonic tool again, there's your top. Yeah, 0.5. So somewhere around here would be 886, right? Something like that. Yeah. And then from that 886, even if you're talking a bat, we're talking a move back up towards, let's say 18.22%, meaning about 113% increase, right? So that's if this level holds and it bases a support and we start to go higher, then this potential wave structure comes into play. For now, this is just a drawing on a screen. Don't take it too seriously. We need to confirm this first before we think about this. Right, we need bottoming structure to come in. So for now, I'm just going to hide this. This is what we should be focusing on for now, for others. But again, as you can see, these are going to be areas where people are going to be extremely bearish. No one's going to be buying. Exactly same story back in September, right? The harmonic setup video. I know a few of you bought. I know many people didn't. But many of those within like 2-3 weeks of the harmonic video went out. All of a sudden, you have like 30% candles on the weekly. Right, so these are areas where you don't be bearish, you don't be bullish, you simply manage your risk. In fact, if you're going to be bullish anywhere in the chart, it should be at areas like this where you can manage your risk, right, to the utmost precision. So that's going to be interesting. Let's see if we get that or not. But let me go back to the chat now. I've not kept up with the chat, so let's see if there's any questions or anything like that. Right. Yo, sup, Grasati, brother. Hope you're good, man. Yo, sup, Sesh. Are the one in the place A, B, and C have the same length? Oh, I never thought about that, Grasati, bro. Wait, if you're wondering whether exactly VCD is, you can always use the transmissive extension for that, where the 1 is the place where A, B, and C, D have the same length. Oh, okay, yeah, no, I get what you're trying to say. I never thought about it like that, actually. That might be very useful. Oh, he does it that way. I always thought. Normally, I always calculated it using just like multiplying by 0.95 or 1.05 instead. Yeah, that's a bit wide, isn't it? uh, yeah, I'll put this on YouTube, Mecha Brew. 3% for everything for that reason. Yeah, fair enough, brother. That makes sense. Okay, so I will carry on. Okay, so now let's actually move on to the cryptos, right? So there's your there's everything in terms of your macro indicator charts, right? So these are your compass. This is what you need to make sure you don't lose bearing in this market. Just keep all of that in mind. If you keep that in mind, you realize on the higher time frame you have nothing to fear. Right? Especially if you have been, like whether it's the harmonic setups video I released or whether it's calls given from other analysts, which were back towards September. Many of even the top 10, the only as far as I'm aware, the only top 10 that's actually been stopped out for me is Vanry. Vanry hit stop loss to break even again, right? Everything else is still in the green. Right, so many people are crying about this. Many of our positions are literally still in the green. Right? So it depends when you entered. Right, if you're someone who entered once Bitcoin broke 100k, like it's a painful reminder not to, top blast. Right, that's what it is. Just think of it as tuition. But let's now go on to looking at BTC first, right, and then I'll look at ETH as well. So, Bitcoin, right? What's been happening? I've not added anything to this whatsoever. These are still the areas that I gave, the ABCDs, right? If you go onto the daily, all you've been doing is basically chopping around that, right? So we were here when this happened, right? When we hit the 2.24, we were hit this. I was away pretty much as after this started to go on here, right? So what we did, we just took out some internal liquidity, right? That's about it. We took out some internal liquidity with this. Very nice close. Took us higher. We front ran the 2.618 to my disappointment. I was looking at this as it was happening on my phone when I had the time. Would have been nice if we'd pinged this, but this just gives us a reason for this to be a target, right? But the important thing to note here is what we've done over time is, whereas we couldn't sustain any closes above the ABCD 2.24, we've now subtly started to do so, right? Look, resistance, deviation, resistance, right? There's your inverted smiley face right there. Resistance, but now what you have, high volume candle to the upside, support, right? Let me zoom in. There, support, and even this dump we had yesterday. Look at the buyback. At the end of the day, what did you close above? You closed above the ABCD 2.24, and what are you doing with today's candle? Pullback and confirmation once again that the ABCD 2.24 is support, right? So the buyers are trying their best to regard this as support. If that happens, I think the next impulse up we get takes 2.618. Right, it's the exact same levels. Nothing's changed. We're just watching this develop at those areas over time. So let me delete this and delete this. So this weekly candle so far is actually looking to be very, very good. Of course, if it closes like this, we have 5 days left to go still. FOMC could change everything. But this, to me, is not bearish whatsoever, right? Look at that buyback. Because it depends entirely on what you're looking at it in regards of. I'm looking at this strictly in regards of a wave structure, right? ABCD 2.24 right there. With regards to that key level, that is an insane liquidity rate of that key level, right? And a successful one at that, because once the liquidity got raided, look at the buyback, and the following confirmation candle so far today has held that area, right? So if this holds like this, I wouldn't be surprised if it did go back up towards 109k and finally took that target out, right, before getting a bigger dump down. Perhaps, right, if we go for a delayed market reaction, we get something like this. But we'll see, right? I'm still not gonna 100% say, yeah, we're gonna go higher until, like, you know, we see what the Fed does. But that, to me, that is extremely bullish kind of body close. Pair that with the fact that even know how many aggressive selling was going on over here, right? I don't even need to open up footprint charts for this. Just look at all the aggressive selling, high volume sell candles, way more selling activity than buying activity, aggressive market shorts opening up, right? People closing their positions, and we all know that's a recipe for these people to get trapped. Trap Traders is such a good conference. In fact, I would guarantee if you open a challenge account and you just decided to have a trading system based off just counter trading the trap traders, you would have a very profitable trading system. I talk about this with my students all the time. You could literally just look at where the aggressive selling and the trap traders coming in, right? Where's the aggressive selling coming in? That's not being rewarded. Are these sellers being rewarded? No, because as soon as the aggressive sell candle comes in, you have a bullish engulfing candle and then a higher low to boot, where it was full of market sells again. Right, and then you've now got consolidation, local smiley faces coming in. These sellers are not being rewarded. They're trapped now. Right, we say they're trapped. And then you counter trade that, basically. I'm going to create a challenge account for fun, just to counter trade people like this. But yeah, for now you can see ABCD 2.24 held. Therefore, wouldn't be surprised if we did go up towards take out 109.806 before we thought about going lower. Nothing much else to say for Bitcoin, right? There is literally nothing else to say. You're still consolidating. There is no technical damage that has been done to the chart yet, right? The daily yesterday, what looked like a bearish candle, ended up closing pretty substantially in terms of buyer strength, right? So I just want to see some follow through to this. We might get a pullback. If we're talking daily candles, we might get a pullback towards 99.942. If you do get a pullback towards 99.942 and you see buyers holding it, you could try and take scalp longs there. Because now this is the area where buyers were active, right? Buyers were in control over the sellers. So if you go down there again on the lower time frame and you see buyers once again taking control, same as we were looking at with the seller zones, in this case is a buyer zone, you take the long, right? Because buyers are once again showing control at an area where they've already done so yesterday. But yeah, that's that for Bitcoin. Literally nothing else much to say, right? Why did we go all the way down here? We had another ABCD at that area. If you take a look on the lower time frame, we had an ABC 382. So the 2.618 for the 382 was right there. Support, 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 support. And the 3.618 was right there, right? That dump. Because I think I was away when this happened. But we had a ABCD again. So just guys, you just need to understand, right? You know, if there's one system out there where for free, yeah, you should go and just learn. Just go to the harmonictrader.com and just at least understand the basics of what he's trying to teach. It's very, very applicable, right? It's very, very applicable. But yeah, ABCD 2.618 first support. You hit the 3.618, and then now you've had your big reversal, right? It's the same thing. The reciprocal ratios are coming in clutch here. What about the 2.24? Let's take a look. Where would that take us? Somewhere around there. So yeah, just that big support line there, over there, basically. Yeah, sound. But I can hide that now. Not needed. There, I'll just leave the others on. There we go. But okay, that's Bitcoin. Let's move on to Ethereum next, right? Let me quickly go back to the chat. Yeah, BTC does look good, Ahmed, for sure. Right, let's take a look at ETH. I'm going to do this bit by bit so you guys don't get confused. Let's turn everything off once here. Group 5, get off. Right, rectangle off. We're going to do this from the basics. Empty chart so you guys don't get confused by all the lines. I'm going to start with my own system by seller zones, right? So basically, here's your 2021 yearly key levels, 2021 yearly key levels, right? What I marked out is the total area where sellers were in control in 2021, total area where buyers were in control in 2021, right? That's these two here, slash to the top, and the bottom to the top is the seller control area, buyer control area. Very simple. Which would explain why have we rejected every single time we've gone to 3,676. If we go to the daily, you can see, right? So we had, if with regards to 2021 levels, you had the fabled inverted smiley face again, right? You have your initial resistance, radon liquidity with the loaded trap traders, reconfirmation of resistance. You reconfirmed your 2021 12-month seller zone low as resistance. What was once an area where sellers were in control is once again an area where sellers are in control. Now with the addition of trap traders, these people need to get going to be forced to cover lower basically, right? Would also explain why did we bounce where we did. So one the reason I kept saying buy ETH back in September, August, right? Was because, well, there was two different reasons, right? The reason I told you guys mainly was because of key inflection areas, another one of my own systems, right? So we have, in terms of range trading and support resistance, this marks the range extreme support resistances. If you think about historical ranges, right? You're at the top of a historical range and buyers are taking control at the historical range, right? No candle body closes below 2282 to 2030 zone, right? This is your historical range extremity, right? And if you turn your range markers on as well, there you go. You never lost that mid, right? That was the main reason I told you guys. But the other reason now is, on top of the fact this being like historic range extremity, the 0.5 of the buyer zone, right? The area where buyers were in control for 2021 was also in this exact area. That is the reason why you kept front running this level as resistance in 2023, right? And then you had this huge series of week after week of just insane sellers and buyers going back and forth with regards to this particular level. Because in 2021, 12-month perspective, this is the mid of the area where buyers were in control, right? So once buyers established their dominance, that's when you went up. Then you came, once you lost that top, ultimately, where did you end up coming back down? Straight back to the area where buyers were in control in 2021 again, right? So now you had confluence with a yearly level, on top of the fact that there was range extremes here as well, right? And once you regarded that as support twice, that is what took us higher again, right? So now there is 2021 levels. We can keep adding to this. Now 2022, I turn these off. The total area where sellers were in control in 2022 is what I marked in this, right? Seller zone, from this high to this here. That's the total area where sellers were in control. So again, in marking that out, we can now see why was this the area that kept rejecting us, right? Because now in 2022, we're saying this is the area, this is literally the high of the area where sellers are in control. You have aggressive market longs looking to smash through this, but they're not being rewarded. Again, it's not about how much aggressive orders come in, it's about are those orders rewarded or not, right? You have a load of market longs opening up here, look, a shit ton. But look at the candle body close. You do not need to open footprint charts, you just need to know how the candle body's closed if you're looking at macro perspectives, right? Were those aggressive buyers rewarded? The answer is they were not, because by the time the candles closed, look, both times it closed below your actual level, not above. You go to the daily, you will see the same thing, right? Aggressive buying, but ultimately, once the weekly closed, you ended up below, not above, right? Deviation, and then reconfirmation here. Look, not a single candle body close above your 2022 key levels. And this is in 2024, by the way, 2 years later, right? And I know this is a bit offside, but this is why I keep saying, if you are someone that's waking up to draw new lines on your chart every day, you do not have significant levels on your screen. Okay, significant levels should stay with you over time, right? There should be some levels on your screen that are almost like pivotal anchor points. You do not move them because they represent such an important area, right? Those are significant levels. That's where you get your best read on price. That's where you get your best opportunities to go long or go short based on the overall directionality shown there, i.e. which side shows you an edge. Sellers show you an edge here, you take a short, right? You take a short because those are the areas where your risk to reward are going to be the best, right? So learning to find significant areas is one of the best things you can do to yourself as a trader. Just forget about your 15-minute levels. Forget about levels you're literally having to change every day. Those aren't significant, right? You're just marking out noise if you have to change your levels every day. Significant levels should stay with you over time. But going back to this, right, aggressive buying, back down, and now the same area is resistance again, right? So what I'm doing here, guys, I'm doing this bit by bit just to build up the picture, right? So if I throw on all the lines at once, it's going to be overwhelming to many of you who are not familiar with my system. So already between 21 and 2022, we've already established a key resistance area for us, right? That is right over here. You have two yearly levels in this area. Again, as soon as 2022 closed, you had this rectangle there, right? So I'm not here trying to fit data to my screen. I'm simply showing you, you could have had these levels down 2021, 2022, and you could still trade around those levels in 2023, 2024, and even right now in 2025, right? So that's 2022. Now, next we have, let me delete that for now. There. This is now 2024. I'm not going to put the 2023 levels down, and the reason for that right now is because 2023 is down here, right? I'm only going to throw those levels down if we actually get down there. Since we're up here for now, I'm not going to put that down. I'm only going to mark this area where both buyers and sellers were interested down. That's it. I'm not going to mark 2023 area down for now. There's no point. So I'm going next. The next candle we're interested in is 2024 again. In 2024, once the candle closed, we had this seller zone, right? We have the buy zone right here, and we have the seller zone. Total areas where buyers are in control are from 2093 to 3,335. The total area where sellers are in control is between 3,335 to 4,104, right? What we're saying is, if you want Ethereum to go and take all-time highs in this case, three things need to happen in 2025. This needs to be support, this needs to be support, and it needs to have convincing accumulation above 4,104. This needs to be support as well, right? However, this is an area where sellers were in control last year. So if you go to any of these levels and sellers once again show control, all you're saying is sellers are once again establishing control in an area where they've already shown their willingness to do so. So you take that seriously, right? Guess what happened? We went up to the mid of your 2024 seller zone before ETH decided to absolutely shit the bed, right? So what happened here? Very, very simple. What happened is once 2025 opened, right, you got to move up. Buyers tried to take control. They defended the seller zone low, right? So the area where sellers were in control, they're defending the low of that. Buyers are attempting to establish a base of support. They do so successfully. Therefore, you go to the next point of interest, right, which is the mid. But once you get to the mid, again, are those look what happens, right? Price action is very clearly telling you sellers are still in control at this area. Why? Because you get that move up. You have, if you go to the lower time frames, aggressive buys stepping in at this area, right there. But those aggressive buys are not being rewarded. Because look, what you have aggressive market longs coming in, but then the overall candle ends up being a high volume sell candle. So those aggressive buyers literally got absorbed in front of your eyes on the hourly there. Right, so you had an hourly entry model at this short here. You also had a daily entry model if you wanted to take the daily route instead, right? But once you see clear signs of one side showing strength, and in this case sellers are already showing strength in an area where they were already in control before, that is a trade you can take, right? So this was a trade I gave to my students in specific, but very, 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 very clean in this case, right? You rejected off the area where sellers were in control. So this is what I mean. You have a significant area, right here. You have a significant area, 12-month level. All you do is wait for price to go to a significant area and then wait for one side to show you an edge. Which side showed you an edge? Is it the buyers or the sellers? The answer is very, very simple. It's the sellers, right? There is no edge if you were to go long here, but there is a very big edge if you were to go short, right? You can manage your risk very easily, right? You can either put it just above this wick. If you want to be a bit safer, I'd put it above those wicks to the left. No matter how you do it, right? The edge is on the seller side. You have confirmation from the lower time frame as well of literal absorption going on, right? Aggressive buys coming in and actual sellers overall showing strength. So, and the moments like that are where you actually enter a trade, right? This is where leverage signs, right? You can of course enter spot, but this is where you get your high RR leverage trades. People use leverage long in the sense they treat it like spot. You think, people open up a leverage trade wherever they want, right? You see price going up, they'll be like, oh, this looks like we're going to go much higher. I'm just going to bang a leverage trade open right over here. That's not how you trade leverage. Leverage is a tool, Moments like these is where leverage really shines, because then you can allocate a certain amount of capital with predetermined risk to gain a lot back if you are right. If you're wrong, you've lost a tiny amount of what you were willing to risk, right? But we have the 2024 levels on the screen now as well, right? So just wanted to demonstrate how that system actually works. So if you now turn everything on, hopefully this isn't as scary, right? So because now you know, even though there's a lot of lines, each line is significant because each line is a 12-month level, right? I'm not just throwing a random, plethora of 5-minute lines on. Each is a yearly level, right? They're all significant. And last but not least, I'm going to throw this on here as well, because this is representing the total area where both buyers and sellers were interested back in 2023 and 2024, right? So with this, I have all the significant levels I could want for ETH on my chart right now, right? So that's lesson number one, right over here. So with this in mind, right, what we clearly see right now is we're below the 2024 seller zone low. Right? That's fine. We're below it, whatever. We're going to add on to this to for me to try and explain why I'm actually still bullish on ETH, right? So for now, let's forget about this and let's move on to a few other things, right? So the first thing we're going to move on to is this ABCD pattern right over here that I see, right? We have this ABCD pattern. We have the ABC, the C is a 618. Therefore, somewhere around the 1.618 would be nice if we got it. Or if you don't get it, it's what it is, right? But if you did get it, that'd be nice. So just remember that one for now. And next thing I'm going to talk about is this, right? So we're going to talk about this. We have a very, very clear, right? So let me just delete some of these first. There. Okay, so there. If we were to get one more dump on Ethereum, right, that took us down towards 2,800 levels, which I'm hoping happens. Even if it doesn't, it's fine, but I'm hoping it does happen at some point. We would have a new wave structure in our hands, and the wave structure being a 618 retracement, which would give us a 1.618, right? And that target would take us towards 4,871 ETH, firstly, right? But the main thing to note here is, what is this structure, right, that you guys are seeing? This structure, again, is a smiley face, right? Talking about smileys, we have a very, very, very nice smiley face printing right in front of us. And this is a particular version of a smiley face I'm sure all of you are familiar with. This is a head and shoulders, right? Now I always forget which one's inverted, right? So, but this is a head and shoulders, right? You have a very predetermined, extremely well-respected neckline. You have your left shoulder, you have your head, and you have your right shoulder in the making. This would be a valid head and shoulders even if ETH went up now, right? But even if we got one more drive down, it'd be even better, in my opinion, right? So first and foremost, it's not the fact this structure is printing, right? It's the accumulation of everything. Where is this structure printing, and what is this structure representing? This structure, the smiley face, represents a cumulative structure, right? This is, if you think about the composite man, you think about footprints left behind by the composite man. Structures like these tend to show you when accumulation is taking place, right? You have initial bids going on, right? You have initial bids, then you have a massive raid on liquidity. And the composite man can get away with this because the composite man has deep pockets, right? The little planktons who are opening leverage trades, or they've got a couple ETH in position size, they are not going to hold, or they're going to be liquidated by the time, especially on leverage, they're going to be liquidated by this dump, right? But someone who has billions and millions, right, in their net worth, whoever's trading this basically, who has loads of money to work with, is not going to be phased by this dump. You're not going to be phased if you're the person that's dictating how the chart looks, right? They do the dump. What happens? All these people, the aggressive buyers, right, the people who decided to open positions here because they thought this was the moment ETH was going to go up to 10k, they are forced to cover much lower, right? They're forced to cover much lower. Guess who gets their bags filled down over here? It's going to be the composite man, right? So the composite man has already, obviously, he's already building his positions here. He's going to offload his positions to the retail noobs up over here, right? So they're buying his bags at a steep premium. Then once he's done offloading however many positions he wants, there's no one else really buying, right? Because the big buy pressure is going to stop because the composite man isn't slamming down big bids here, right? So all of a sudden you have this huge sell-off because there's no more buying pressure in the market, right? So you have the huge sell-off, right, back down towards support. Maybe the composite man will pick some up over here, go back up again. The aggressive buyers are going to come in, he's going to offload, and eventually you're going to go down. And these people getting liquidated over time, right, is what's going to build a good average for the composite man again. His orders are way too big to be filled in one clip, right? He's not going to one clip, he's not going to one bang this trade, right? He needs liquidity to get this done. So over time is when his average slowly builds up, right? So over time he's getting his bag filled and filled and filled at the expense of the of the traders who don't know what they're doing, or perhaps they're less experienced, right? They're opening at the tops, they're being trapped, and then you have this move straight back up. Once the bags are filled, you have this move back up. Once again, people FOMO in. This is the last time the composite man would offload some of his positions, right, to these people. And when you get that move back down to reconfirm what was once support as support again, that will be the last time some bids are placed by the composite man. This is a footprint left behind by, it doesn't have to be one person. When I say the composite man, I'm talking about an entity. I'm not talking in the first person. I'm talking about an entity. Could be a group of hedge funds. It could be big players. But as a group, people who collectively have the money to move markets, right? That reconfirmation of support confirms, okay, we have what was once support is support again, right? This was just deviation, and that is when you get your ultimate move up, right? But people who aren't aware of structure like this, or people who aren't waiting for this, they aren't patient enough for the high time frame, like buys to play out. They're going to be chopped up a million times by the time something simple like this has even been built, right? So we have currently a cumulative footprint left behind, right? As long as these lows aren't breached, right? If you start closing below this level here, right? If you go and you start closing below this level, then yeah, I mean the structure's done for, right? If you start getting weekly closes below and you start putting back, the structure's done for. You wouldn't have the argument for this structure anymore. Maybe you have a bigger range that forms. Maybe we take our range lows again and then go up. But until that happens, we have a head and shoulders currently being peeled. I believe it's inverted if it's upside down. I'm not sure. But it's a head and shoulders nonetheless, right? I'm just going to call it a head and shoulders. I'm completely happy with one more dump into this zone, like I was saying, right? I'm completely happy because if I turn within a falling wedge, right, we've got the ABCD structures going on here, right? We've got all these patterns. We've got the buyer seller zones now, right? We've got key levels. Even if we dump down towards 2,600, it wouldn't matter, right? If you wick down here, it doesn't matter as long as you close above. It has to be a quick wick. If it's wicks, the structure's still intact. Okay, the thing that would ruin this is if you start closing candles below here and then consolidating here, right? So in terms of wicks, I'd be completely happy even if we got, let's say, 2,687 ETH, something like that, right? And then reclaim and then shoot up. But for me, any zone down here is just bid for ETH. I already have a very, very good average on ETH. I'm not going to ruin it. So I'm only going to be bidding it basically if we get this. I'm already 6 figures deep into ETH, right? I'm not going to ruin my average until basically either I get this, or I wait until we have some sort of breakout and then a high low being formed. Confirmation we're not getting this low, basically. That's the only time I will now average up again. Otherwise, I'm not going to ruin my average yet. I'm going to be patient a bit more, right? My average on ETH is the low 2Ks. But the key thing here is the structure, right? The structure is good, and you pair this with, it's not just this, you pair this with seasonality, right? Seasonality wise, we know ETH isn't going to underperform. I mean, yes, ETH does underperform, let me rephrase that, but ETH isn't just going to go to 4K and then die again, in my opinion. That's not going to happen, right? ETH is going to go and grab these highs, right? I think there's a very high chance, let's say, of course, never say it's definitely going to happen, but there's 99% chance we're going to go and take these highs at some point, at least, right? But we're probably going to price discovery for ETH as well. But it's more than that. Seasonality, we looked at Total 2, right? Total 2 is compressing. That's going to break out at some point, right? When Total 2 breaks out, of course, ETH is going to go along with it. And we'll also look at ETH against BTC in a minute. But ETH against BTC, seasonality-wise, halving years when it should start to outperform. We didn't get that last year whatsoever. And post-halving years when ETH against BTC really outperforms. So I know the seasonality has not been respected this year whatsoever. But this year should be the year where ETH against BTC starts to see signs of life. I would say at the minimum, sometime this year, ETH against BTC will have bottomed out, and then we'll have started to reverse trend and go up, right? Maybe we go full-blown parabolic next year. Maybe it happens all in the course of this year. We don't know at the end of the day, right? But seasonality-wise, we're approaching the time period where it makes sense to be more allocated into ETH than it does into any other coins, right? So of course, I'm still going to have BTC, but I'm going to take heavy profits the next impulse up we get on Bitcoin from my 39k average swing long, and that's just going to be there again, just be rotating into ETH, right? I'm going to opening up a load of different swing longs on ETH, going to be scalping ETH on a more regular as well, and just buying more spot ETH, and then also looking for ETH betas. It's just a concentrated bet I'm going to take, right? So my bet is at some point this year ETH's going to take the lead, right? That's just what it's going. That's just the bet I'm trying to line up for now. But a lot of key things to consider here for Ethereum, right? So like I said, the structure, main thing, and seasonality, pair those together and you'll see why I'm trying to say that this is where I'm trying to position for ETH. Right? And the last but not least, if I turn the range markers on again, where we currently are, right? So if I turn on key inflection areas, we know this is where we bounce. So where we currently are is the mid of the historical range, right? So this is your range extremes of the historical ranges. This is the mid of the historical range right here. You dump to the mid of the historical range and you're still holding, right? You're holding at the end of the day. That's bullish. So this could signify, as long as this is holding, right? You don't worry about this level. As long as this level holds, right? Moves back up towards 3,500 are not out of the question. Perhaps another rejection, one down, and something like this. I wouldn't mind if something like this were to play out. But yeah, Ethereum, I'm very excited for this one, right? That's my reasoning behind ETH. I need to look at ETH against BTC with you guys next, of course, as well. This is going to be a very ETH heavy stream, like I said, but I think get it out of the way early, you know, so before ETH actually starts to take the lead, so you guys are familiar with how I'm going to position myself and stuff. Right, let's take a look. Yeah, Grassati put the PDFs there. Those are the books. Just read them when you can. Right, 1 second. Let's take a look next at ETH against BTC then. Right, so ETH BTC right over here. Again, don't let the chart scare you. I'm going to do this bit by bit, deconstruct it. I've got 60k allocated for ETH against BTC. Right, I'm just gonna be going in slowly over time. We're gonna do this bit by bit. Okay, so what I'm gonna do is first and foremost, right, the fixed range volume profile. Let's begin with this. The simplest way I can show this. Fixed range volume profile. For those of you that are not familiar with this, all you do, you select a range that you want the data showing for, and based on the range you've selected, you get the volume data for that range based on the settings you have. Okay, so now my settings are very different to the ones most people use. I got my own settings for this, you know, just using maths. But all you need to know is, right, basically, the range I've selected in this case isn't just any, it's the macro. I call this the macro fixed range volume profile, right? I've selected all the way from the left, all the way to the right. Okay, so the range I'm working with is the entirety of ETH against BTC on Binance. Okay, with that being said, what this is showing you is this is now showing you the volume data for the selected range. So this is showing you the volume data for the entire ETH against BTC chart. Right? What is the volume data in particular? So this is showing you between the two blue lines, which we call the value area high and the value area low. This is showing you, right? For me, this is standard deviation 1. This is showing you where 68% of all traded volume has taken place. Okay, now I'm using Gaussian distribution for this. 68% of all traded volume has taken place between this value area high and this value area low. Okay, and again, with regarding the range, like we said, we've selected the entire range. So this is 68% of all traded volume for the entire range so far on ETH against BTC has taken place between those two blue lines. Right. Now this red line for me, this is called the POC, the point of control. What this is showing you is the peak of your distribution, i.e., in this case, at which level has the most transacted volume taken place, right? So you can imagine these three are very, very significant, right? And if we're talking where we currently are, we are at a very significant area. We're at the area where the most transacted place, right? Sorry, the most transacted volume has taken place for ETH against BTC since its inception on Binance. Okay, taking the entire range, this is where the most transacted place, the most transacted volume has taken place. Very, very important. So first and foremost, my macro thesis is going to be based off of this. Are we above this or are we below? We're currently fighting it, but as you can see, a load of aggressive sellers are starting to come in. Right now, there's no signs yet of those sellers being unrewarded. Right, these sellers are being rewarded for now. Right, so for now, you're not going to take any counter trades or anything based on this. Right. But eventually, aggressive selling is going to carry on, and eventually they're going to be trapped, right? That is the moment I'm waiting for. For now, we're at a key area, right? On the weekly, we're fighting the point of control of the macro. So, do we close above or below on the weekly is the first question, right? You can look at this on the daily as well, of course, right? And you can see we're trying to lose it on the daily for now, right? If we lose this, we're going to slip down. So that's the first. Thing on the chart, right? So let me turn that off for now. We're going to do this bit by bit again, so you guys don't get confused. The next thing to look at is the buy-seller zones again. First and foremost, we have the 2019 buy-seller zone, right? In this case, the 2019 seller zone. All I've done is mark out the area where both buyers and sellers were active. Sorry, no, I marked out the area where sellers were active, right? The total area where sellers were active in 2019. That's what I marked out. If you take a look at where we currently are, we've just about front ran the mid, right? I do want to tap at that mid. We just about front ran it for now. Next, we've got the 2020, right? So in the black, that's the total area where both buyers and sellers, right? Total area where both buyers and sellers, in the black, that's the total area where sellers were active in 2020, right? I'm losing my train of thought. So in 2020, right, between 0.04058 and 0.02546, that's the total area where sellers were active, right? And again, if we take a look at why significant levels, if you take a look at this, right, the last time we were here, 2021, you can see those are the areas that were used as support slash resistance before breaking out, right? Same 2021, even though the white is 2019, the black is 2020, right? 2020, 2021, resistance, support, resistance, flip to support, and then breakout. 2019 levels also still being respected in 2021, right? Support, that mid, right? Now the next time we're visiting here is all the way in 2024. First area you bounce from is that area that is 2019 slash 2020 12-month levels, right? Bounce again, back down. Then you flip the 2019 to resistance, and this is the moment where you would have flipped short on ETH against BTC, right here, right? And that, of course, that is if you completely ignore the any movements up here. It's speaking strictly just for this region. There was a short right over there, and then you go down, and then you turn the 2020 12-month seller zone high into resistance as well, right? This area we're using as support is the 2020 12-month seller zone mid, right? Support, lower time frame smiley faces, again, support before you lose it, right? So again, significant levels, right? Different charts, different types of charts. It doesn't matter if it's ETH and BTC, it doesn't matter if it's just ETH, doesn't matter if it's total, stocks, commodities, cocoa futures, whatever you're trying to trade. Have a method that lets you have significant levels on your screen. That will take you a very, very long way. Okay. But for now, you can see we're below our 2020 12-month seller zone mid, but we haven't tapped the 2019 12-month seller zone, macro read seller zone mid yet. I do want to tap at this level, right? So that two levels there. We have more levels coming up, of course. We have the 1819, right? So if you look at 18/19 right here, this to this, right? That's the area where both buyers and sellers were active. That's the reason I'm marking it out, right? Even though it's very close to the black lines, I'm going to mark it out for lower time frame purposes anyway. And if we do that, that also explains this short now, right? So the short that wasn't previously available to us. Actually, no, sorry, not that one. It explains why this was so strong support, right? You have two mids from yearly levels lining up in this area. And last but not least, we have 2024, okay? This is one of the charts that's actually below its 2024 buyer zone low, right? So the total area where buyers were in control in 2024, even amongst the face of all this selling pressure, buyers were stepping in to try and defend this area in 2024. So that's the total area where buyers were in control in 2024. As soon as 2025 opened, what did we do, right? So 2025 right over here, broke above, deviated, grabbed liquidity, and then just completely nuked, shat the bed, right? We've literally confirmed the low of that to be resistance in the Saturday last week on the 25th, right? Resistance. If you were to take a look on the lower time frames as well, it's more than that. You also have, if you take a look here, right, you have inverted smiley face again, and this is a particular type. This is one where you front run your significant level. People think, oh, I got front run. This is a front run, but is the front run in context? Yes, it is, right? What you're saying is, look, you have deviation of your significant level at the end of the day, right? What you're saying here is you're so bearish, buyers aren't even letting you come up to tap this area to begin with, right? You're just bombarded with supply as soon as you get below 0.03377, right? So it's still a smiley face, inverted smiley face, right? Still bearish. This is a distributive structure. If the smiley face is cumulative, this is distributive, right? And that is what led to this move down over here. So that is all the 12-month levels, right? So just like I said, bit by bit. So far we built up a chart with 12-month significant levels over here for ETH against BTC, and I'm only focusing on this area because we don't need to focus on anything up here for now. This is what we're working with, and we've got the macro fixed range volume profile, right? So we already have a significant area marked out in this between the macro fixed range volume profile and this extreme, right? If we can hold this level as support, we're saying we're holding a yearly level slash multi-year point of control as support, and you wouldn't be surprised if over time you bottomed out at this area, right? If all those aggressive sellers kept up, but then now you start to see buy stepping in and those sellers not being rewarded and stuff, this would be an extremely confidential area to bottom out. But in the case that we do lose this, we have more significant levels and a better confluential area, in my opinion, to actually look for the bottom of ETH against BTC. Okay, so let me turn this off for now. Let me delete that and turn this off. Next, right, let me introduce you to the concept of using fixed range volume profiles for trends. Okay, a tip and trick you can do with fixed range volume profiles: you do not need to think of ranges just as a consolidation range. You can also think of ranges as trends, right? Or in this case, range extremes. So for me, I see two macro range extremes from this high to this low, and then from this low to this high. Right, we have two macro pivot points on our screen. So all I'm going to do is take the fixed range volume profile data for those two macro extremes, right? So the first higher to lower is basically from this peak down to this low. Okay, so if I was to go ahead and turn that on, it's going to be this one. Yep, there. All I'm doing is getting the fixed range volume profile for this entire move down, right? And this is in the hopes that when we do eventually reverse, we still have significant levels that the market's going to run into based on that move down, right? So we have value. This is only standard deviation 1, right? I'm not doing standard deviation 2 or standard deviation 3. I do 2 for this particular one, but basically we have a fixed range volume profile here, and then from low to high, once we bottom out and we go to that peak, which led to this move down, we can do that as well, right? So we have two distinct fixed range volume profiles on our screen, right, based on the two macro pivots and impulses that we've had, right? So this is, I'm getting the volume data for the macro impulses. If we do that, then you will see where these levels are coming from. All I'm doing is marking these out, right? So you don't have an extend right, you don't have an option in TradingView to actually extend these to the right, sadly, so you have to kind of do it manually, which is why I've done it this way. All right, so let me turn those off. So now you know where these levels are coming from, right? These are the standard deviation 1, value area high, value area low, and point of controls for the two impulses, and also I'll put the standard deviation 2 for the high to low as well, right? So now we have those key levels. You can again see why did we have such a strong reaction from this area for the high to low point of control, right? This was the high to low point of control. So from this peak down to this drop, this was where the most traded volume occurred for that area. And the reason this works is because you're saying if you go back into an old range, of course, right, it goes without saying the volume data for the old range is still going to be intact, which is why I do this, right? But if you're going into a previous range, then the volume data for that range is still going to be intact, right, for that particular range. So that's where these come from, right? And last but not least, we also have macro harmonics. Okay, if you take a look at M shapes, we have two harmonics. We have a macro shark 886 and a macro bat 886 around 0.02437 to 0.02374. So let us now go ahead and put all of that together, right? If I put all of that together, I turn on the macro fixed range volume profile, I turn on our 12-month buyer seller zones, right? I turn on our two different fixed range volume profile data. Now hopefully the chart isn't as scary anymore with regards to all the lines. You know where each thing is coming from, right? All I'm interested in is this. We have two distinct areas for ETH against BTC. The first one is the one that we've already marked out, right? That being this, right? Between the macro point of control and our yearly 2019 level. That's been very important support over time to be maintained this area. If we can maintain this area and all those aggressive sellers end up not being rewarded at this particular area, we could very well bottom here and then change trend, right, and go up. At the very least, we could very well have a bounce from here that creates another lower high before we go lower. And of course, if the last lower high, they let the lower low is taken out and a higher low is put in, then we say, okay, the bottom's probably in, and we probably get a move back to the upside. If, however, we just can't maintain this for some reason, right, and for whatever reason we completely break down or we create another lower high, then the extremely confluential area that I would want to absolutely slam the biggest bits are going on ETH against BTC would be down over here. Okay, the area where we have two macro harmonics. We have the standard deviation 1 point of control from the lower to higher. We have the standard deviation 1 value area low from the higher to lower. right? And on top of that, if you look at the weekly, we also have a weekly buy zone. On the weekly, back in 2020, this was the area where buyers were in control, 2 weeks in a row. A lot of confluence down here, right? So both of these areas are areas where you can easily manage your risk. So if you wanted to take some lower time frame bids on ETH against BTC, you do so with this in mind, 0.02985, right? If you close below that, you'd cut because there's a high likelihood you then dump all the way down towards these confluential areas. But if you don't, right, then you could catch a nice trade back to the upside, right? But if you do get below that, then the next area you'd be managing a risk is basically in this zone here, right? Let me get rid of that, this particular zone over here. So ETH against BTC, right? I think we're very, very close to a bottom, if not already at the area we're going to do so. So that's the reason I'm allocating 60k for now to this. And, you know, if we get to the bottom and I just see like insane bullishness come in, maybe I'll just make that 100k and, you know, just cap it off at that. But I'm going to have big bags of ETH and anything ETH related going into the next, at least going into 2025, like into full blown into the mid, like quarter 2, quarter 3, so on and so forth, right? I think this close seasonality wise, of course, we know post halving years when ETH against BTC has always exploded. Now, we didn't get any sort of reaction last year, and typically halving year should be when ETH against BTC tends to start to outperform, right? If I do this, look, halving year, you start to outperform, and post halving year you go bonanza, right? Halving year you start to outperform, post halving year you go bonanza. We didn't perform at all halving year, so at the very least I want to see, you know, what was meant to happen last year happened this year, right? We start to outperform. Maybe even 2026 is when we absolutely blast off, who knows, right? But I think you know, I think BTC could catch a lot of people offside, right? With just, it's just been selling. Once we get to those areas, bottom instruction needs to come in, right? I think even I don't care if this doesn't go to new highs, right? I do not care. I just want a big enough position size where on the second biggest crypto asset, even if we go catch a 114% move, I'm making some serious money. Right? That's all I want to catch in this. And I'd rather do so risking on the second biggest asset cap than, you know, some random meme coin or any low cap assets that could dump 30% at a slight sneeze from Bitcoin, right? Which is why now Bitcoin's had its move up, Ethereum hasn't really had so it just makes sense for me logically to be in Ethereum next. So do you guys have any questions on this weekly close in 5 days and 11 hours? Yeah. For scalps, it's for scalps it's pure confirmation based, brother. I'm not limiting for scalps. It's confirmation. It's market orders, strict TPs, no DCAs. Completely different to my higher time frame strategy. I'm either a scalper or a swinger. I don't do the in between intraday trades. That's how, for those of you that are OGs here that was here, so if you guys remember my $48 to $16,000 account I did in 2023, right? That's how I did so. Started off literally just scalping, high RR, low risk, low risk, high reward, right? And then after $48 became like 4 figures, then I started more into swinging it. But we have that's ETH against BTC. Right, I think this looks very, very good. Very confluential areas coming up, right? So next, let's move on to some ETH betas I'm looking at. 3 biggest ones actually being, LDO, right? I want LDO. Why? The chart speaks for itself, right? Again, I'm not going to go through the trouble of explaining all this now. You guys know what this means. 2021 12-month levels, right? 2022, so on and so forth. But LDO, currently at an area where you can very easily manage risk, right? This is a spot setup I gave in my own survey yesterday. But basically, LDOs, that's an area where you have 2024, 2023, and 2021 yearly levels lining up, right? You can see very, very important support and resistance area here for LDO. Resistance, support, resistance, resistance, support, 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 resistance, and now trying to flip into support. The chart for LDO looks amazing, right? This hasn't really been affected that much by the dump that's been going on, right? And even if you were to take all of these away, if I were to take all of this away, right, we do have a potential 886, of course, right? We do have a potential 886, but that's only if the lows get lost. So for now, that's all it is. This is a potential 886. If we get here, great, even more opportunities to bid, right? But the market structure for LDO, again, cannot be denied. If I do this and I just do this, right, just take a look. Hopefully you guys are seeing where this is going. Initial supports, radon liquidity, you have had a reconfirmation and support. You have a smiley face here. You have a smiley face built up. So if we never actually get this, then this literally could be the low for LDO, right? And then this thing just picks up steam now. Do you have any harmonics that have already completed for LDO, brother? Grasadi, is he still here? Right. There might be some. I don't know if I've got the oldest chart for this or not. But yeah, LDO is definitely one on one. Yeah. I'm just gonna start layering into spot slowly, right? Even better than LDO if you want to risk to reward worthy OP, right? Here's another ETH beta. Just take a look at it. We had a pump right from the September entries that I gave. Hang on. So from this entry that I gave, we had a pump of 104%, 2x, right? Took my initials out, put stop loss to break even, and then I've actually not been stopped out yet, but I got it's like literally a hair's width, right? But might as well class it as back to entry. So should the weekly close like this, right, I'm going to be patient. All we've had is a type 2 of a harmonic. We've hit terminal 1. Look, we've hit T1. The first harmonic target for the M shapes that we had for OP has been hit, right? And then now you've had a pullback. This pullback, for you harmonic traders know, this is called a type 2 return, right? So this return basically reconfirms the PRZ, right? If the weekly closes like this, we have a type 2 return on hand for LDO. Let's say the weekly were to close like this. How would you take a trade? I would take a trade just like this, right? Put a stop loss somewhere below your where's your range extreme? I'd do something like that. And if you're trying to swing this, you're trying to really take this up, right? Ultimately, you're trying to take this up towards $4, but of course, you're going to take TPs along the way. The first TP target for me would be somewhere between $3.30 and $3.70, right? Somewhere over here for a swing. That's OP, right? So you can see if ETH goes, of course, ETH betas are going to go with it. Like if the parent chain goes, liquidity flows down through the parent chain. ETH betas are also going to go. Another one that I need to add to this is Arbitrum. Right, there's ARB. Same thing, right? ARB gave us 119%, initials out, stop loss to break even. We've not been stopped out at break even yet, right? But again, very close back to entry. So if we do come back over here and hit it, right? And let's say we get an 86 dump, I don't care. I could just recompound, right? Get recompound, and that recompound would be even better because again, what do we have? We have a type 2 return for the shark that was there on ARB. The whole reason we took this trade to begin with. Right, you completed M shape, the shark, you have your type 2 return, and again, if that type 2 returns anywhere close to an 886, even if it's here, right, we already have a 786, but anywhere between here to the 886, right, if our bottoms out here and carries on going higher, we have a potential 886 on our hands here. Only thing we need to do to activate this is flip the B point, right, and once ETH really goes, right, also pop this hard without ETH even going. Imagine what's going to happen once ETH actually seriously goes, right? Also going to go absolutely ridiculous. So, and this, these went up here without ETH even really going hard. Once ETH goes into price discovery and it's really proper old season, we're going to go higher. These targets it might seem unlikely now, but they're going to come quick. They're going to come very quick once the market conditions are right. Okay, so ETH betas, definitely I'm going to be putting, for now, I'm just going to allocate 10k each for LDO, 10k to LDO, 10k to OP, 10k to ARB. My biggest bags are going to be the bigger, layer ones. And then once I think ETH's close to topping out, then I'll take profits out and then rotate into these if I think, there's any that still have legs to go, right? But for now, anywhere between 10 to 15k allocation for these for me, for now, right? I'm just going to swing that low leverage. So, ETH betas, right over here, right? If you guys have any more ETH betas that you think look good, of course, ping me in chat, send them through to me, right? And then I can look at them. If they look good, I can add them here. But apart from that, there's also a few other coins I think look really good, right? So the first one being, let me just go through these now, Pepe. I was looking at this yesterday because a student sent me a request. Pepe looks absolutely amazing. I'm not interested in shorting this or anything like that down over here, right? There will be people trying to short this. If you need proof, you just need to turn on that. Yeah, red dots mean aggressive selling going on. The reason I like Pepe is this. We have 3 distinct M shapes, right? In terms of harmonics, you have firstly this, right? You have the 886 of a shark. If you take it from X, A, B, C, D, right? There's your shark 886. Then you have the thing I really like, a macro Gartley, right? Look, X, A, B. Pretty much a perfect 618 on that B. C, and then a D, right? The D would be a 786, and that'd be just above your 2024 12-month macro read buy zone mid, right? So the area where buys were active in 2024, going to be retesting that, right? So that's very confluential. So basically, I'm splitting this into two zones, right? The first zone being this. That's your first PRZ. And your second PRZ is this, right? Another thing you do have over here is also this, right? You have, if you take it from this X to A to B to C to D, you have an 886 there, right? There's your X, there's your A, there's your B, C, D. You have a shark again, right? There's your 886 for the shark. Now, of course, I'm sure you could find harmonics if you took it from, you know, this, but you can do that if you want, but I'm just going to leave it at this for now. And on top of this, you also have an ABCD pattern. Right, look, there's your A, there's your B, there's your C. The C is 0.5, right? If you're looking for the 0.5, we know we're looking for the 2.0. So, if I was to unlock this, zoom in, and just make that a perfect 2.0. Hang on. There, 2. Is that a 0.5 up top? Yep, there you go. This right here. The D point is 7.4. Yep. So I'm gonna take this. I'm gonna do this, and I'm gonna go settings. I'm gonna paste that in, and then this is your AB equals CD 2.0. There you go. Right. So we have another PRZ right over here. Right. So the first PRZ up there, and if you lose that, then the second PRZ is going to be a rate of liquidity of that trend line, and it's going to come down towards this area. These are the areas where I'm going to be just getting into Pepe. For spot, I don't care, right? Just get into here, get into here. You can literally spread your bids out throughout these areas. For lower time frame or for leverage, you're going to treat this as a zone. If that's lost, get out until either this zone is reclaimed or you get to the lower zone, right? That's why those two are there. But Pepe approaching very, very important areas now, right? So Pepe is one, but yeah, there's loads of alts that look like this, right? There's loads of alts that look very, very good. Cypher Shark. Yeah, nice, brother. Yeah, I think LDO looks so good. Yeah, Pepe. This Pepe's that's gonna be a great re-entry on Pepe. We have the original one down here, of course, right? Again, from the harmonic setup video. Have I deleted it? I think I've deleted it. We had an M shape here, right, which is when I gave that September entry right over here for Pepe. Just recompound on that. But yeah, there's loads. If I go, oh yeah, I just wanted to point this out. This was in my harmonic setup video as well, if anyone did get in. I held this for the longest time, and then I sold it, like literally a couple weeks ago, and then I missed out on a 1,983% pump. It is what it is, though. But yeah, loads of things playing out. Another thing that did play out the other day was, finally, again, from the harmonic setup video, this one took ages, but spell. This thing finally basically hit targets, right? So ATC was the last target for this from the harmonic setup video. After all this time, we finally got the pump. So I did take profits on this. I'm like 80% out on this. I only have a tiny moon bag left. But there's loads, guys. I'm gonna spacebar when I get the chance, right? I'll probably release another harmonic setup video again because many of these are coming back down for retests, right? But PAL is another one. This is one I gave to my students super early. I gave it to my students around 10 cents, and then later on I've been talking about this for I think last video as well. We talked about it, especially at the high low we made at 21 cents. PAL looks amazing. 886 right here, right? We have a bat, and the bat is not just this, right? So if this low is held and we don't challenge this low again, the 86 is going to give us a 1.13. Right? I don't know why that's at a 1.2. One sec. So this 886 right here is going to give us a 1.13 up over here. There. So we have another wave structure on PAL. Terminal 1 hits, right? You distributed around terminal 1, but high highs and high lows are still intact, right? That's not changed. Your 12-month buy-seller zones, even yesterday you tapped the 23-24 12-month buy-seller zone high. Again, high highs, high lows are intact. And more than that, if you take a look, AMD model is still in play, right? There's your accumulation, there's your manipulation. It's a valid manipulation because you went to take out liquidity, right? You had liquidity below that BAT 886, the demand zone, 3-day demand zone, you took that out. You didn't take it out fully, but you tapped into it, right? That's as valid. And then now you're in a distribution phase. Right, so your distribution phase for me, basically go take out the final bad target as a swing, and then after that, price discovery. right? But I think PAL, another one to keep an eye on, guys. For those of you wanting to add an AI play into your port, PAL is a very, very, very good one, in my opinion. Right, the chart speaks for itself. There's serious strength in this chart. Um, and in terms of flip speed resistance fan, you know, you've hit the, if we do this, for example, you for now you're below the 87886, so I'm hopeful you get one more tap down towards the 94 again. Otherwise, you know, you just see something like this again, it's just gonna send higher again, right? So you know, in terms of no matter how you look at it, this looks very, very good, right? That's the point I'm trying to make here, right? Um, and even if this, let's say this was the bottom, you have a potential bad taking it higher. Even if you go deeper to an 886, 786, does not matter. Doesn't matter where we bottom out, as long as it's like, you know, somewhere between now and an 886, you're gonna have another wave structure taking it back higher, right? So PAL, a very good one to add if for an AI play. But there's loads of good ones, guys. Rune, right? Take a look at Rune. X A B C D, right? 886. I had this one marked down for a long, long time on Rune, right? As soon as this distributive structure came in, initial resistance, radon liquidity, reconfirmation of resistance, 886 has finally hit, right? The 2.61 at the bat went through it, treated resistance, but now at the 886. That bad 886 also hit 3-month FVG. If you look at the 3 months, look, you have a 3-month fair value gap in this area, right? So for now, what you're doing, you have a weekly high volume sell candle, right? And one way to manage your risk here is very, very simple. Current cycle, right? Look, I'm going to put down the weekly buyer zone, right? This is the weekly buyer zone based on the high volume sell candle there. You're currently at the mid of this. If by the time the daily closes, so on and so forth, you end up closing above the weekly buyer zone mid, right? Just start layering into something like Rune, literally. Because you have your higher time frame targets, and then you have now local targets to base around as well, based on previous week high volume sell candle, right? At the end of the day, as long as you don't have like weekly and, you know, 2-week closes below the 3-month fair value gap, below $1.91.2, you're fine, right? Any rates of this, as long as you close above, it's just going to be that a rate, and now you're looking to go higher. So Rune is one where you could literally manage your risk and start laddering in now, right? Look, aggressive selling is going on. If that persists, they could very well get trapped, right? Rune's another very, very good one, right? So there's many, right? These are just ones that my alerts went off on predetermined levels, right? Like I said, I need to spacebar. I'm sure there's a load more I can find. I just need to find the time to do so. Cetus, right? For those of you that missed the original call on this, right? The 573% pump. Look, getting a chance to re-add something. This is literally the DEX for both SWE and Aptos, right? Both of them, in my opinion, are going to pop when the olds go around. Cetus is going to go with it, right? So if you want a layer 2 play, a DEX play, right? Cetus. You don't need to look further. Just have a Cetus back, right? Now, this lower cap than things like, of course, Uniswap, so on and so forth, but it's also newer, right? And, you know, multiple chains are going to be using it, multiple high-value chains. We've literally hit a 8.7, right, for a potential bat. Now, of course, bear in mind, I'm not taking this to the peak, but I'm just taking this as there, I'm just going to put it at 886, right? We've wicked up, and then we close below. So for me, that's just an 886. So there, right, 87. Maybe we get a bit deeper to an 886, but between the 87 and the 886 is deep value for me anyway, right? So again, Cetus, another one, right? There's DYDX. Back down at our Shark 1.13 from all the way back here, right? All these key levels, you're back down for your type 2. You went way past terminal 1 for this, right? 234% pump. Yeah, 234% pump. And then we're just going to recompound, right? You're back at very, very key areas, look, right? For something like DYDX. Look, key support, backer support. There's so many, like, my alerts went off on all of these. Like I said, there's going to be more, but there's going to be a lot, and you don't have to get into everything, right? That's the thing. I'm not going to be showing you 10 different ones, 50 different ones, like I did in the harmonic. The reason I reached the harmonic setup video was to show you guys, look, there's like 60 different coins that are currently actionable areas. You just need to choose the ones you like and enter. That's the whole purpose of me making videos like the harmonic setup ones, right? So I'll make another one. I'll post it when I get the chance. But I'll spacebar through it, find different coins that I like. Trump, this is another one. I've got a long on this open. Why? Well, we have a XABCD, right? That is a 886. Aggressive selling going on, right? So I've got a short open on this. If we flip $32 into support, I'm getting out of my $74 short. I think I'm just going to close it. And just focus on the long instead. But yeah, Trump, another one. I think you could get a relief up back towards, like, you know, $50 out, in my opinion, for this. So yeah, there's many coins here, guys. Right? There's many coins. We'll be looking at many recompounding opportunities as well. But yeah, I just need to find the time to spacebar through them. Literally, that's it. GMX. Let's take a look. Back down. Literally, look at this. Right? Look, that's a type 2. Look, you literally filled your terminal 1 zone on GMX. Right? It's the trade setup that I gave. You have a shark. You're at the type 2 for the shark on GMX. Look. Right? So just recompounding opportunities. Right? You completely filled terminal 1 zone. Back down for a type 2 return. If this type 2 retest is successful, again, got a double bottom kind of scenario going on here, to be honest. Even if you it's 186, maybe you get a shark out of this actually. Even if you do raid, let's see, 1.13. I don't know if you do get the raid, but even if you get the raid, everything's gonna be fine. Minimum 886, right? That's what we're looking for. So yeah, something like that perhaps, right? But GMX, that's another one. If you want to add something to Dexys, now this is specific for Arbitrum, so how well this does is going to hinge entirely on how well Arbitrum does, and by extension how well ETH does. But I'm going to add this to Focus V2, and GMX goes underneath ETH betas, right there. So, but yeah, I'll take some time to look for new opportunities and stuff as well, guys. That's the first Harmony Setup video. If anyone actually did take any place from that, it was a cook. I think pretty much everything laid out on there gave at least like 200 to 250% returns. At the minimum, you did a 2x, right? So now, if we are getting a high low, the next drawdown before we get the serious pump up, I'm excited. That's for sure. ETH5 potentially on this deep gully. ETH5, I'll add that to my list. Oh yeah, I can see a deep gully coming to hit on ETH5. Yeah, I'll take a look at that. Audi, yeah, I'll look at Audi. Microsoft, okay, Audi, ETH5, spacebar through those. Look at virtual. Yeah, sure, I'll look at virtual for you, bro, then I'll end the stream here. One sec. And I think you're right, brother. I think TradingView did change its colors. It's gone grey. I think I prefer it, to be honest. Virtual should be in my watch list. No, okay, never mind. Okay, let's see which has the most data. Mexi, Bybit, BitGet, KuCoin, CoinX. Those are normally the ones with the most data. Was more for. I'm gonna go with Mexi. Gonna go with Gate in this one. Nope. And nope. Okay, let's go with Gate then. Something like this, is my opinion, is way better off if I just go on to log and then alright, let's take a look. What have we got here for virtual? Trend based extension, we have not much. It's just straight up. 2 weeks, how about that? That's not going to be good enough. Nope. That's going to go into the 4 territory. What about the 3-day? Okay, I think the proper way to do this is going to be with fib retracements instead. There's your initial retracement, so you're going above 1. So we're dealing with fib extensions here, okay? So what I'm going to do, let's go with the 1 to 2 first. Is that going to cover everything? Nope. So we're going to have to go with the 2 to 3. Golden pocket, blast off. Okay, so 2 to 3 is going to cover it. There we go. So where did you top out? Again, golden pocket plus liquidity rate. No big surprise there. Golden pocket liquidity rate is where you topped out. But there's not much to give here in terms of market structure, right? So you've got high, low, lower, high, lower, low. I mean, it's a downtrend for now, so maybe you get another lower high somewhere here. That's a problem with log. You can't really get key levels off something so young. 1 second. So the zone I'd be interested in actually getting into this would be here, a raid. Take these internals out, and if the raid is successful, then get in between 133 to 154 basically. That's what I have for virtuals. I mean, it's very clear that we had a very insane move up. Actually, I know one thing I haven't done yet, and that is this. 1 second. There, where you currently are, is the golden pocket for this coin. Let's see, wave structure wise, we have oh, I hate it when it's a 609, bro. Do I take it as a 0.5 or a 618? Right, bun you. 1 second. Do we have anything else on the 4 hours that I can take a look at? Now, I don't want to start putting macro wave structures on this in case it doesn't hit, but okay, so 5.7, so we're just gonna go with the 0.5 for this. There we go. If you get this, you're very lucky. Honestly, for something like this, I'd be interested only in a deep extension, just because I wouldn't be happy with how hard it is to manage risk here. If you take a look at where you are, if you buy here, you're basically saying you're okay, right? You're saying you're okay with holding this, even if it goes down towards $1.35 or $1.25, because that can happen, right? That's your next zone that you're in. Your consolidation zone is right over here. So you're saying, yeah, you know, if I buy here, I'm okay with. If we go down to take and liquidity rate like $1.26, and it's just way too wide for me, right? So I wouldn't buy virtuals here. The only way I would buy this is if you got a confirmation of, you know, all these being swept, right, and you actually got a close above. So what I mean by that is if you take your weekly buy seller zone, or daily in this case, but what about the weekly? Nah, can't do anything with the weekly. There you go. You have this level right over here, right, between your macro 618 and now your previous, you know, yesterday's selling candles mid. If you wanted to enter at current areas, I would only do so, even if you're doing spot with a lower time frame basis. As long as you can use this as support, enter your spot bag in one. Don't DCA, don't do nothing. If you lose this level, just cut your spot bag, right? Just cut and just re-enter again if you get above. That way, even though it's going to be more dynamic and you're going to have to be in front of the charts and managing your trade more, at least you're able to manage your risk in an area where otherwise it's going to be very hard to do so. Okay. Personally, I wouldn't be getting into this here, just because I've not got the time right now to be able to, you know, look at the charts and be like, I'll be closing above, I'll be closing below, so on and so forth, right? The entry is going to hinge entirely on do you close the daily above this or not, by the way. So you wouldn't enter right now. As it is, you wouldn't enter anything, right? But if you do close the daily above this grey box, then, you know, just market buy spot or whatever, just buy your spot bag in one. Forget about DCs, forget about anything like that. If you lose this box again, right, on the higher time frame, on the daily or something like this, on the 4 hours, right, whatever, just cut your position. Because that way, even if, you know, you're not losing much at all, right, at all, and you save yourself the headache of trying to have to manage your risk for this range here. Because make no mistake, right, this is the range you're going to be in if you cannot accept this top as support. If you break below and buyers can't defend, you wouldn't be surprised if you came back down here. Okay, this is your next consolidation range on virtuals. I would want this 886, honestly. That's where you could manage your risk the best. I think patience would be required for that, of course, but eventually you would probably get this. Hope that helps, bro. Okay, say's the last one. I'll do say, and then I'll cut. Gotta got early on with. Oh, is it on this one you mean? Virtuals. Ah, okay, yeah, I see. From this point here, Gartley, that would take you to a bit higher actually. Yeah. Okay, yeah, yeah, that's a nice spot, brother. 602 792. Yeah, bro. Would you take this as a ABCD? I always get proper. I get pissed off when I see like something go towards a 618, but then it just stops at like a 609. Because technically it's not gone to a full 618, but it's close enough, right? So I'd take it as a ABCD. If you do that, you have a 1.618 over here as well. At the 764786. Yeah, so you basically have, you can see you have, in terms of wave structure, you have targets lower, bro, Rohan. You have this, a reason as to why 764786 could be the low. That would line up with Grassati's Gartley as well, right? So there's your, basically you have two PRZs. The first one being if you take the Gartley from here to here to here to here to here, right? 764786 is going to be your PRZ. If you lose that, your PRZ is going to be that 7886 basically. That's the next wave structure that you have. Okay, so I'll look at say, and then I'll cut it there. But if we go to say here, say, okay, so for you, Billy, say, not stop to break even yet, but honestly, depending on how daily closes today, I might just cut this, however much I've got left, just cut it and just look for re-entry opportunities. My average on say is so my last size up was at the right shoulder, right over here. So my average on say is like 0.23 something. It's 0.23 something. So it's a 0.3 now. If the daily closes below the mid, I might just cut it honestly, and because I've already taken nice profits up at the top, especially when I mentioned that, right? I mentioned that shark macro 5.0, sorry, not shark. We had the macro 5.0. The 5.0 is giving you this, but think of this like a type 2 because that's what it is. This is a type 2 return. Same as everything else, you've taken out your terminal 1, you've taken out your 0.5, you've got a type 2 return, right? Eventually, what we're going to get for say, just like everything else, right? Let me delete that. And then, honestly, I don't even need these anymore. But let's targets. I'm going to do, oh, Jesus, I hate it when I have so many rectangles. Get off. You can stay. You can stay. Why have I got a horizontal line? That's the 8 point, so you can stay. No. Where the hell? Oh wait, no, never mind. It's gonna be that. Yeah, you can stay. You can stay as well. Trend lines, you can go away now, not needed. XABCD, yep. Go invisible for now. So where's the other harmonic? It's right here. Okay, it's come up. There. Turn that invisible. And turn the ABCD invisible as well. There. Okay, so those are all the harmonics together. Say lost the uptrend, right? You lost the uptrend here, double top, and then confirm the loss of the uptrend over there. For say, what I'll be looking for now is, let me delete this, let me delete you. So we have 2023 levels. So what about 2024 then? On the 12 months, there we go. Right, 2024 levels I've not put down yet, so let's put those down. So 2024, if you're talking 2024, so there's your 2023, and if I go to settings here, get rid of that 0. No. If I go over here, get rid of that 0 there. 2024 key levels are as you're going to see in the screen. So here's your 2024 buy zone. We are at the buy zone now. That's where we bounced off from, right? So very key support, as you can see. So here is last year. This is the total area where buyers were in control, right? 2024, 12 month, and this is your buy zone mid. 2024 12-month buy zone low. And forget what I said, I'm not going to close my position until this is lost. 2024 12-month buy zone high. And on top of that, of course, we also have the macro read. The macro read being the total area where sellers were in control is right over here. So 2024 12-month, this is the macro read. It's a seller zone mid, and here is 2024 all-time high. There we go. So we are very, very clearly at a key area as we speak on say, right? You have 2023 and 2024 12-month levels in this area. You can see aggressive selling going on at this zone. As long as you do not close below, and one last thing I'm going to do is also throw this on, right? So based on, hang on, last week, no. Okay, so based on yesterday's daily close, current cycle, that's for anyone looking to maybe trade this today, there, right? So this was yesterday's buy zone. We are currently at the mid of yesterday's buy zone, which falls within yearly buy zones, right? As long as you don't lose ultimately 0.2996, you're completely fine. But if you're looking for a trade to take on something like the 4 hours, intraday trade basically, if you can keep closing 4-hour candles, or even hourly candles for that matter, if you can have a successful hourly close above 0.3079, you could take an hourly trade on this, right, within the next hour. If you wanted to scalp this, at 1 hour, you would time frame align that to anything between the 1 to 5, 3 minutes. When you see something like this, right, based on a successful close, you lower time frame trades like this. But again, I would not recommend 3-minute entries on low cap coins, right? I only do this for BTC normally and sometimes Ethereum. Hourly is probably the lowest you should go, right, for coins like say, which have way less liquidity than the main. But so if this hourly is successful, even 30 minutes, even 30-minute can be good, right? If in 11 minutes and 54 seconds you have a successful close, you could very well try a intraday trade, something like this. Let's say the candle were to close like this, and the confirmation was to open above 3079. That's important, right? And of course, the main thing is this candle actually closes above 3079 as well. But you could take an intraday trade literally up towards, let's say, that, something like that. You could take on say. But now on the macro scale, right? On the macro scale, as long as you do not lose this level, this zone between 3121 and 2996, right? As long as you don't lose that, I think we're completely fine on say. If you do lose that, I wouldn't care if you visited back down towards 2026 again. I'll just re-enter say, right? But for now, we know there's an M shape. We know we've got wave structures. This is a type 2 0.566, so basically 0.5, right? Let's just take it to the close. You have 805. We could have one more drive down, of course. You could go towards an 886 or something like this. But even if we don't, right, even an 886 retracement, a bat basically back up will take us towards $1 something, right? So from here, even from where we currently are, that's still going to be a 242, 241, 242% move. Even on spot, that's nasty. If you go in with size, you can do a low leverage swing. Can be 2x, 3x, 5x, whatever, right? You can go in, do a low leverage swing, and just make some serious money on this. Right, we just need a confirmation of the bottom. That's it. Just need a confirmation of the bottom. Now, in terms of fib speed fans, hang on. What about if we do that, and then I go on settings, and then I go on there. Yeah. So in terms of speed fans, we are currently also at the 87886. Okay. So these are areas where you do not fade. You pay attention. Right, you will see what people do. They start banging open market shorts here. They will get rid of the positions. When in reality, you're at a deep discount. These are areas where you should be bidding, right? Logically speaking, these are areas where risk reward makes sense to bid. You're at the 87886 of your fib speed resistance fan from that low to that high. Okay, so these are areas where you can very, very easily manage your risk for say, especially if the daily closes like, let's say above 0.5. If the daily closes above 0.31, more importantly, but if the daily closes over 0.0379, you can literally factor a trade in with a stop loss basically below that low somewhere here. If you get a confirmed close below 0.2996, you can just cut, but you can start laddering in. If you guys remember, 20-40-40, right? That's my entry system. Depending on how far away you are from your from your stop loss, you change this number. If you're pretty far away from your stop loss, of course, 20% is fine. Maybe lower it, maybe increase it. But if you're very close to your stop loss, increase this number, right? You can do 50, you can do 40, whatever. Reduce these. The tighter your risk, the bigger your initial entry should be, right? Just make sure you only position fully once you have the confirmation the trend has shifted to the upside again, because for now the trend is to the downside. But yeah, that's say. No problem, Billy. Giraffe extension 1 and BC 1.618 SSR. Because it in length, yeah. Yeah, got you, bro. Yeah, we're just curious. Short sending, nice. Yeah, sure, brother. I can send the screenshot for this in. So again, the day if you're looking for swing entries, wait for the daily close. Okay, you want the daily to preferably close above 3079 and ultimately above 3121. But even if you just close above 3079, you could literally enter a big spot play with basically telling yourself, okay, if we get below 3079, I'm just gonna cut, right? But if you're looking for intraday trades, 30-minute, wait for the 30-minute to close in 7 minutes, and then just open a trade based on how well this closes. You could do 15-minute entries as well, of course, but 30-minute for intraday traders. But if I was to do a screenshot of this, it would be like this. All the key levels are over here. Let me turn off this. Let me leave that on. Just so you guys have the levels in mind. Right, there you go. Right, I don't think we're going to get down there anyway, so actually let me just do this so it's easier for you guys to see. Perfect, okay. Copy image. There. Right. Does anyone else have any questions? Otherwise I'm going to end this stream here. I'm going to get me some food. Like I said, I need to do a spacebar. I need to do a spacebar session again. Just go through everything that has, you know, actionable areas, good setups and stuff. I will say though, for this next leg up, guys, please, if you are someone, especially even on this, like, you know, bullish phase we just had in the market, right? If you had like 15, 20, 30 positions open, in my opinion, just reduce that, right? Just reduce that. This cycle clearly isn't like other cycles, right? So just from experience, we're looking at just take a step back and think what's happened so far this cycle. What's happened is things have been popping off out of order, right? It hasn't led the alt rally. It's been a very Bitcoin dominant market, right? And some alts have massively outperformed, while some have barely even done a 2x, right? So clearly, this is no longer just whatever you put your money into is gonna 10x season no more, right? It's not. There's way too many crypto tokens. We're severely diluted. So your skills as a trader are gonna be important, sure, but it's also more now as an investor. Can you outline and can you get a grasp of what is currently hot, what is the current narrative, right? That is a skill that is also going to come into play, right? So I'm going to be just leeching the hell out of all my fundamental analysis friends, right? Those who predominantly do fundamental analysis. I've got some friends who are very, very good at that, because your ability to actually choose projects is going to be just as important as your ability to trade, because you might be a very good trader, but if you're putting attention on the wrong token, you're not going to capitalize on the money rotations, right? So this cycle has been a lot about rotations, as we can see just from experience. I was just taking a step back to have a bit of an intermission the other day. I was taking a think, and I was thinking, right, well, it's clearly not like any other cycle. So that's the reason I came up with, right, okay, well, I need to go down a lane instead of just any random coin that looks like it's got an M shape. So that's the reason I'm focusing on, like, ETH betas. I'm going to be looking at AI, right? AI agents, so on and so forth, right? Some RWA like Ondo and stuff. Some memes, of course, right? Doge. I think Doge goes without saying. I think Doge is going to melt at some point, especially with Department of Government Efficiency and Elon. but you have to be selective, right? Just so be very, very greedy with your capital, and be very, very what's the word I'm thinking of? Intentional, right? Be intentional with your bids. Don't just bid anything that looks like it might pop or whatever, right? Just have a for a majority of your pool, have a reason behind why you're bidding this particular project. Has it got a hot narrative? Is it like, following a certain trend? Is it an AI agent or something like this, right? Is it something that's currently hot in people's minds? Is it occupying a lot of mind share? Um, those are going to be just as important as your ability to find significant levels and so on and so forth. I think going into this next phase, just a few words to think about, in my opinion. But yeah, guys, if you guys have no more questions, I'll end this here. Um, I'm not doing one-on-ones right now. I've got a few DMs about that, but I'll be resuming them from February. So if you guys are interested, I'll be resuming them from 5th of February onwards again. So just send me a DM and we can get it set up for then time onwards, basically. But apart from that, just catch me in my weekly live streams. And thank you very much, guys, for your time here. Appreciate each and every one of you. Thanks, Grasari, brother. Always appreciate you being here, man. And I'll talk to you guys soon. Yeah. Right. I'll end the recording here.